Okay, well, let's get you the first global opinion. Herald van der Linde, head of Asia Equity Strategy at HSBC, is joining us. Herald, great to have you back on the program. Thanks very much. You know, you're bullish on India. You've made that clear in very unambiguous words. Just a quick word, though, Herald. You know, the small cap and the mid cap space is the one which is piquing interest for a lot of people. And the way the rally is unfolding there, almost, 0.5% kind of compounding, daily compounding. It's unusual. What can you tell us about that? I mean, and what kind of flows are you seeing there? What kind of interest are you seeing at HSBC and your colleagues at other investment firms?
No, it's really interesting because you're absolutely right. I think one of your colleagues just put on the screen that there's a party going on in a smaller mid-cap space in India. And that's absolutely right. And that's much more so than in any of the other markets that we see across the region. And that is really domestic flows. You have, of course, across India, a lot of people who invest in stocks either through mutual funds or your systematic investment funds that they have, or trade themselves. Because the foreigners that I talk to, they don't really go in that space. They look at the top, say, 15, 20, 25 key stocks in India, the large caps, because they come in with large volumes. But there's enormous amount of money flowing around in that part of the market, which I think is really healthy as long as the valuations stay in track, right? But it's healthy because you see that domestic savings are being channeled in domestic investments there. Pretty good. I like it.
Okay. Okay, you like it. That summarizes it, right? You like the Indian markets. But I want to talk about certain pockets, because if you look at what's happening with the Bank Nifty, right? The Bank Nifty is now down over 3% in just the last 1 month. As a long-term investor, would you use this as an opportunity to buy some of the large banks? I mean, HDFC Bank has been a big underperformer. Would you jump in there, or are you a bit cautious?
I think for the moment on the banks, I'm a little bit cautious. That's where maybe the blue moon, you were talking about the sentiment that comes out in blue moons. And maybe for banks, that's a little bit the case there as well. Why is that the case? Because I think there's better, interesting opportunities in some other parts of the market. I'm thinking about some of the consumer names. I'm thinking also pharma is something that has really surprised through the reporting season in India. So the numbers there have come through. I think that might actually continue for a little bit longer. We like some of the autos sectors, so that's something I would be looking at. The banks for the moment, it's kind of, maybe the blue moon needs to get out of the way first.
Hi, Herald. Good morning. India is the long-term love story, it appears so. But in the near term, do you think that investors would like to have a bit of a fling with the Chinese markets? Because you have action out there from the central banks. You had them cut the stamp duty as well out there. And valuation-wise, well, they're fairly attractive. So in the near term, say in the next 3 to 6 months odd, do you expect China to come back?
Yeah, I think there's a good risk that China could come back. So you're absolutely right, Nigel. India we like for the longer run, but it will be influenced by what happens in the other parts of the region. And what we've seen is that a lot of money has gone into North Asia, because that's where Japan was doing very well. That's where artificial intelligence plays were doing very well. That's where that really hovered up a lot of the liquidity across the region. Now, China, I think people are a bit too negative on China. The sentiment is extremely poor. And if you look at the macro indicators, it just doesn't look very good. But keep in mind, a stock market is not an economy, in particular in China. And there are two things that could help China. One is that actually, despite the fact that we've seen so much bad news on the macro side, the earnings numbers in China, and it's still reporting season in China, it's finishing actually today, if I'm not mistaken, is actually coming through pretty good. China is going to grow as fast, if not marginally faster than India this year. So that's one thing. Secondly, China is really sensitive to what happens with global bond yield. Now, you guys were talking about that. But if we see signs that, for example, there is a bit of weakness in the US economy and those bond yields will come up, that also supports the Chinese market. So those two elements, even if they move a little bit in the right direction for China, the fact that sentiment is so poor could really shift the capital flows across the region back into China. And that would be, I would almost see that eventually as an opportunity to buy India. Yes, that would probably mean some of the foreign flows would go into China. That allows China to rally. Let's assume that for the case. But as I mentioned, China of India is the place where you want to be, Indonesia actually as well, over the course of the next couple of years. So I think I would eventually wait then to move back into India, into Indian equities, if such a trade were to occur in the second half of the year.
Harold, will this, what central banks in the West and the Fed, etc., are doing, will that at some point emerge as the dominating driver for flows, etc., or you think that's done and dusted? What's your sense?
No, I think we're very close to the peak in interest rates. Of course, if you're a central bank governor in any country, but in particular in the West now, inflation is not done yet. You cannot say that you're going to lower interest rates. It's like if you're a doctor, you will not proclaim your patient to be healthy until you have clear evidence that on all indicators, everything looks good and all his blood tests come out good. And I think that's where we are. They know that they're moving in the right direction, but we haven't got clear evidence signs that we're out of the woods yet. So the talk will still be for, yes, maybe we have to do a little bit more and these sort of things. But eventually, I think as we go into November, December and into next year, the market's going to say, hey, the blood tests that come through look pretty good, actually. We're on a different path here. And I think from the second quarter onwards in 2024, the Fed is talking about low interest rates.
All right, just one quick question before we let you go. The big event upon us in the next 1 year is the national elections, right? The general elections in the month of May. Now, the expectation is that there will be political continuity, and I understand that that's great for the market. But if anti-incumbency does, rise and things change, a new government comes to power, for a long-term investor, would it really make a difference?
I think very often when we look at markets and politicians, we're looking at what sort of plan they have. And I don't think that the plans differ too much. Of course, the approach and the philosophy from which they come from will differ a little bit. It is more about how these decisions are being made. So, for example, as I think I mentioned before months ago, I was in Tamil Nadu. Fantastic food, by the way. I think it's one of the places of really good food in India. But anyway, that's another story. Yes, exactly. Well, although my favorite, and I think it comes from the north, is chola bhatura. That's kind of heavy stuff that comes from the north, right? But Tamil Nadu has got some really good cuisine. Anyway, I traveled there, and you go through the paddy fields there, and then suddenly you're on a highway, you drive for a couple of kilometers, then you're off again. So those highways need to continue to be constructed. Whoever sits in Delhi will not change that. So there are these kind of investment programs in place in India that will go on irrespective of who goes on. So I'm not overly worried. I would agree with, I think you just mentioned that we're going to get continuity. I think that's probably the case. On the fringes here and there, of course, different people have different policies. But it's these sort of plans, build out of infrastructure, that will not change. Just like Indian cuisine will not change either, whoever is in power.
You know, you were talking about chola, right? I mean, there's something called bhatura also, Herald. You can.
Yeah, that's
one
of my favorites, actually.
Herald, next time you're in Mumbai, or on behalf of both my uncles, Sonia, Prashant, we're going to take you out for a nice meal, and I'm sure you're going to love it.
Even better if you're all able to go to Delhi. That's the home.
But you do need a stomach of steel, by the way. You need a stomach of steel to digest all of this spicy food. I hope you're okay with that.
Good. I'll hold you to that. Next time I come through, we're going to get some.
It's a gift from God.
All right, Herald, appreciate your thoughts here on CNBC-TV18 and got us all hungry now. So we're going to go and grab some breakfast. Thanks a lot for joining in on our show this morning.
Actually, I was going to ask Herald, you guys were talking about the moon, full moon and all that.
Blue moon.
Blue moon, I mean, yeah, but any favorite moon movies? I mean, full moon, werewolf movies?
No, I was just thinking that he said, oh, banks are down, blame it on the blue moon. Now you can blame everything on the blue moon, Your portfolio's down, blame it on the blue moon.
I was just thinking, there was a movie called Junoon. Do you guys remember it? Okay. Rahul Roy came out in the 90s, early 90s.
I still get nightmares thinking about that movie. Thanks for reminding me, Prashant.
How did we get to Anyway, a lot of talk about the moon. We'll take a quick commercial break here. We'll come back and we'll talk about the list of stocks to watch out for on the other side. Our research team will get you that coming up in just a bit.